And welcome to the Euro trade with myself, Market Stalker D. Hopefully everybody's having a decent week. We're gonna see what the day brings. I'm still waiting on my live account, so we're gonna be on the combine if any opportunities arise. I have copper and platinum here. Copper is looking a little bit too choppy. Why? Because we have so many options levels here. Whenever I see that, it never really leads to smooth movement. On top of that, overnight VWAP is also sitting right at 70.35. Pretty flat at the moment. Similar story with platinum, except platinum is still hanging above that 1080 level, which was the top of the weekly range. Now, if you were watching TopstepTV yesterday in the afternoon, or your morning, depends on where you're located, I pointed this out, right? So this is the top of the weekly range. We're really trying to extend above it. So I'm slightly leaning to pullbacks and then more longs. But again, we're going to see exactly what the day brings us. Let's see the options levels in platinum. Okay, so here's some minor GEX levels at 1080. That's GEX 5. And if it starts to go up, nothing really up until 1095. I would probably still be shooting for the at least 1100 if we can get it. Gold is just decided to sell off and bleed through a gamma wall that was located at 3220. So yeah, it's so far nothing too interesting for me. What are the profiles doing? London profile for copper, it's attempting to accept value but having trouble around value high. So the acceptance that we saw early in the day, and just for posterity, value from London is 69.75, whereas COMEX value high is also sitting around there at 69.65. So obviously that can bring some longs into the picture, but we can also go and use it as a line in the sand, where if the market closes below 69.70 roughly, maybe even a bit lower, 69.35, I would deem that a value acceptance that does have some juice in it. And as always, we want to be watching the volume for conviction in any moves that we're seeing, all right? So platinum, where are the levels of interest? So we have stronger GEX levels lower down. Now, if it goes below 1080, that to me would be more a signal of reaccepting the former range. If that happens, obviously I'm not going to be looking for longs, but maybe looking to go in short. So everything is in a bit of a holding pattern right now. And let me just see what gold is doing, because I know a lot of you like to trade gold. Gold moving through value and past COMEX settlement. That was at 33.16 roughly, and the value high was at 33.19 on gold, and currently continuing the move towards the GEX 5 and HVLs, and also another core resistance at 3,000. So let's have a look at the gold chart. As always, starting on a massive time frame. Big consolidation, big distribution area. Some people like to call this a flagging pattern, but honestly, I prefer to look at it as the price having trouble in this area. If we are going to have some kind of a flag, I would like to see some more conviction to to the upside, because this one just keeps closing candles below the previous candle opens. And now testing the nearby supplies. So again, not super clear. Could go higher, could go lower. What is the daily chart doing? Daily chart, still unable to create meaningful structure back to the upside. And if this current high from the overnight, roughly at 33.52.5, or thereabouts, if that stays, that will, for me, signal a lower high. So still in that sort of downward channel, trying to move lower. Remember, these are very big time frames. So all we're doing here is just looking for a bit of context and a bit of meaning. And by the way, if you're here for the first time, sort of stumbled across the screen, I have been trading for 18 years. So I've been a prop trader since 2013. So it is not all the stuff that I'm talking about, maybe going over the head of somebody who's a little newer, especially if you've only been trading for a year or two. But yeah, so far, nothing obvious, right? So we're going to take it slow. 4-hour chart of gold trying to close below the 9 EMA. Moving averages for me are just a measure of how well the price is doing and how far we are from those areas. But yeah, gold is the only one that's unglued itself from Globex VWAP, which is a form of a moving average, but it has volume in it, so it does carry more weight. Bit of a crossover here between the 9 EMA on a 30-minute chart and VWAP. That could lead to further downside. So maybe metals today might go into a bit of a sell-off that everybody's looking for. And I don't necessarily want to fight that. You know, if the chart is saying shorts, then we go short. If the chart is saying, hey, we're running out of steam to the downside, then we go back up, right? It's fairly simplistic in that regard. And any levels that I have, they're just like orientation points so that I don't get trapped in any kind of market maker inventory adjustment. Right. Blaster, probably new here. I am a commodities trader, so NQ is not something that I trade. I think NQ is covered to death across hundreds of YouTube channels and also covered to death during the main broadcast. So, you know, if you want to see the NQ analysis, you know, this is probably not the show for you. If we ever get DAX, we can be looking at DAX, but again, DAX is currently not available on Topstep, so we'll see. Vladimir Cotto says, hello, good morning from California. It's 1:35 a.m. always following on TopstepTV, but it's hard to be on the live, but thank you for always teaching us. Yeah, thank you for being here. I really appreciate that. I know it's very late for you. So, you know, anytime I see somebody staying up to try and catch one of my lives, even though you can always rewatch them, you know, they are there, but still very, very good to see you. Admiral is saying if gold goes up, short big time, lower low. I don't know. We'll see. I don't know. I'm open to both sides of the picture, right? Okay, just have my Discord on my phone here so I can see the comments. Lido says, I just did some visualization, meditation, and breathing exercises. Coach Dr. Jerome said it works, so I tried it. Yeah, the thing with visualization is that I like to imagine myself in losing trades and then going through the motion of what it kind of feels like if you're wrong. I think that's more useful, personally, for me than going for, you know, imagining the big day and everything, because I want to live through the emotions of losing and then not going on tilt as a result of that. But our brains can't tell the difference between reality and strong visualizations when you involve feelings. So you allow yourself to feel everything that you would feel at that moment. And because it's it's a visualization and not an actual action. It helps us to get ahead of some of the behaviors that might happen to you. So, you can maybe imagine getting a little frustrated with a loss and then stopping yourself and going into that introspective mode to prevent any tilt. So, yeah. We have a question. Sassive Self, I don't know. I'm butchering your name. I'm so sorry. He says, I'm new here. Can you tell me about the markings on your chart? GEX3, HVL. So these are options related levels. So GEX3 stands for gamma exposure. So GEX 1 to 10 marks levels where there is quite a lot of interest, but they're weighted by the level of interest. And whenever we come across one of these gamma exposure levels, they are levels where market makers might adjust inventory. So the reason why I don't like seeing all of them bunched up so close together like we have on copper today is because it doesn't bring smooth movement. You don't really have risk reward towards the next danger zone. So what I do, I take the options levels from the end of day, previous day, and then I try and match them to whatever levels that I already have, like the value area, quantitative extremes, which is the ADR high and low that I also have marked in this chart. I didn't mark this one. That's what that is. But yeah, whenever I see this, it's always like, oh God, okay. So you're either going to end up in chop, or you have a choice to wait until we kind of pop outside of one of these. It depends what sort of a trader you are. I'm a bit of a chameleon. I kind of trade ranges when I need to, trade breakouts when I need to, but mainly if I were to classify myself as just a one thing only, I'm naturally a mean reversion trader. So on most days I'll be looking for mean reversions and swings from bigger areas that have a lot of legs. Therefore, they can just go into a very, very big extended move because we come up against, daily supplies or daily demands. And then on an intraday level, I'm just looking for these as more zoomed in areas where I can, use some kind of a stop loss that is not ginormous so that I can actually get the risk reward intraday, because I'm at this point about 90% intraday trader, and that's been like that for many, many moons. Julie's asking me whether I mind sharing my EMA settings. Not at all. Very simple. I have 3 9 EMAs. They're just set to close, low, and high. That's it, right? Most EMAs, when you first put them on the chart, they will default to the close. But I'm using it in a slightly different way. You can use just one 9 EMA, but I like to use a ribbon, and I never really use it on big time frames like a 30-minute chart intraday, and 30-minute is pretty large, right? But I use it on 2 minutes or on a 100-tick chart or a 4-range chart, which we still don't have here. But, I do use other platforms as well. So, range bars plus this ribbon, it kind of gives me an idea along with the tape, because I do have another thing called bookmap, but I've actually decided to separate charts and dome. So what you're looking at here is just the charts, and then on my lower screen I actually have this sort of a situation with time and sales and just 3 domes, and that's actually how I usually set up my charts. I have one screen designated just for the dome, depth of market, and the ladder, right? However you want to call it. My computer my main computer did not make it through the move, unfortunately. So I am working through a laptop, which is great. And it's in one of those Asus Duos. So I have 2 screens natively immediately that comes with the laptop, and then I have another big screen that I hooked up onto it. I have no idea how this thing is actually handling all the stuff that I'm pushing into it. But, it's workable. My computer, the new one, should arrive at some point. either towards the end of this week or beginning of next week. So hopefully I will have a big machine with 5 screens, because frankly, we have things like TopstepTV. You know, I have Bruno that helps me with the questions to make sure that I keep on top of all of them. You know, I have Slack open to communicate with the team from TopstepTV. You know, there's like a lot of stuff that takes up space that is not necessarily trading related. And then I generally have 3 different screens that are just charts. But right now I'm down from 5 screens to 3, and it's a bit of a stretch. I won't lie. I keep having to like shuffle things around and everything. But yeah, but we're working. It's okay. Lido says, I only made 1 trade around about an hour ago. I haven't seen any setups yet. Yeah, well done. Sitting on our hands, being patient and everything. So yeah. So Julie, hopefully that helps you. 9 EMAs, never crossing over because I'm using it as a ribbon. And further explanation of the ribbon. If you don't want to use time and sales, or you're maybe not ready yet, or you feel like it's too complex for the current skill set that you have, it's kind of a replacement for the time and sales, because the volume and price, they have generally a positive relationship. So 90% of the time, if you have a big move, it will be driven by more volume. Not always, because sometimes you can have zombie rallies in equities that just keep going on very low volume, and nothing seems to be happening, and yet price just keeps kind of going higher. So it's not, 100%, but on most times price and volume have a very positive correlation. So what I would do, let's say that I'm looking at longs. Let's go to HG actually, because it might be simpler to follow. Let's say that I may be planning this to be a chop. So I have a couple of options. We either carry on through, Gex 2 into more of a directional day, or we turn around. So that'd be the hypotheses that I'm running based on the levels and assumptions that I would like to jump in on, because I deem that those are pretty decent areas to get involved in. So let's say longs from 468. What would I need to see on the ribbon? I would need to see this 2-minute chart, which is a very, very, very low time frame. So I would need the ribbon first and foremost to catch up to the price. So I don't want it like further out. So we need to have a little bit of a slowdown. Then I would like to see the price move above the entire ribbon with no no selling wicks. So for example, if you were going to go long here, I wouldn't have done that, because we have a big selling wick even though we exited the ribbon. So only if the market gives me a strong candle that kind of eats up about 3 or 4 previous candles and also closes above the ribbon, that would be a fairly good signal from the level. So you can't just use it in isolation and go, oh, just look at the ribbon and price action. No, you have to have a level. So level comes first. Any kind of timing tools, which is what I consider my ribbon to be, that comes after, right? That will prevent you from doing stupid things and just, catching a falling knife, or trying to short markets that are just smashing higher. So we always look, I call myself Market Stalker D for a reason. We, as market stalkers, which is my community as well, we'll wait for levels to come to us. So we wait for price to reach our levels, and then we look for the market structure shifts that speaks to the hypotheses that we want to get involved with. In a chaotic environment full of uncertainty, such as the markets, the only way to succeed is to follow your own rules. And whilst the markets are not random, they're definitely a structured environment, there is a lot of uncertainty and probabilities that play out over time. And that part, over time, always seems to go over the heads of people, and they're just like, well, I just had a really good week, just 1 week. It's like, yes, but what levels did your playbooks come from? How many times that same thing plays out? If you were to examine that same one level, let's say VWAP, how many times does VWAP provide a bounce in the run up or run down to it. And then I would go further. I would go, well, how far were we from VWAP when the mean reversion to VWAP decided to appear? And then do we have a possibility of bounce from VWAP? That would be playbook 2, all like based on the same level, right? That's how you create your playbooks. I love to use flowcharts because they externalize the thinking and they streamline the playbooks that might seem quite complex. Love my flow diagrams. I'm a bit of a freak when it comes to explaining things in flow diagrams, but I feel like they have clarified many setups for myself, but also for people who have come to me for guidance and coaching. So yeah. Jackal says a couple of scalperoos. I can't be bothered with scalps, man. If I'm going to be involved in a trade, unless it's a super rangy day and there's like nothing else available, I'm going to wait. And, you know, I don't necessarily see a scalpy market today just yet. The way I like to scalp is if we end up in a neutral day type. So you have the first hour of trading, which is referred to as the initial balance. And then we extend below it and above it. And when it extends to the opposite side, that's when I would look for my scalps. And then I only want to scalp down to the middle of the range. I'm not looking for yet another full rotation through it. But it's very contextual, and it's down to what the option, like this is very ugly for me. So maybe we end up in a neutral day type today. And this is why I'm not putting too much stock into value acceptance right now, because we have potential for value acceptance. But again, I would probably need to see the corporate chart go and close somewhere around 48.35, and then maybe a little bit of a pullback and then a continuation. In absence of that, if we're just going to sitting right underneath the initial balance and we don't manage to bleed through the GEX2 level, which is at 468, I don't want it. I really don't. So I don't think it's a good momentum trade. And in that case, maybe, just maybe, I might want to go from a little long from GEX2 up to 470. That's like the middle of the profile. But yeah, scalps for me are a waste of mental capital, increase in risk, but the reward for me is not there. Especially the directional markets, you know, if something goes on a run like copper does, you know, copper is very directional. Once it decides on the direction and it kind of gives you conviction in it, that's your direction for the day. So you can look for pullbacks and stuff and all that, but you can easily take 70 to 100 ticks nearly every single day. And then if we have some headline risk and volatility, you're looking at like 200, 300, 400 ticks in a single day across like 2-3 hours. So why would I scalp if the market is giving me 400 ticks to play with? I personally thrive in volatility. I don't find it scary. I actually love it. It does take some experience and a bit of adjustment. But yeah, it's been, to me, it's been great. Back in the live account, yeah. Thank you, Trump tariffs. So, yeah. Vladimir is asking me if you do scalping. Lund Green. Yeah, I missed that one. Where's your VWAP anchored? My VWAP is anchored to the Globex Open. And I don't really use session VWAP unless we're in a neutral day type. And then I will kind of use it as a target. But generally, Globex VWAP is what you will see 9 times out of 10 on my chart. Vladimir wants to know, if I do scalping, how many points would you consider a good scalping trade? For me, it would be 35 to 50 ticks. Anything less, I consider it a failed trade. I don't consider it, oh wow, I did a great scalp. It's like, no, it's a move that should have gone further, but it didn't. And some people love taking 10, 20 points or 10, 20 ticks, depends on what you're trading. I don't. I absolutely hate doing that. But mind you, I'm not, I'm a little bit older. I've been trading for nearly 2 decades, and maybe my mindset is a little bit different than for most people. And I've seen how scalping sups not just the mental capital, but it increases stress. Generally, scalping systems, the way retail traders do them, because there's scalpers out there that they're doing it professionally, And typically they won't do 1,000,000 trades per day. Some people do, but that's more like leaning towards more higher frequency trading. And those kind of individuals generally don't do that manually. They have like an algo that does it for them. Those of you who are sitting there smashing buttons, trading 100 trades per day, and you've only been trading for like, under 3 years, I would argue that you're kind of doing it the wrong way. So, unpopular opinion. And then what I've seen in the VIP is actually, as a coach, is that people who claim they're scalpers, when you introduce time into whatever they're doing, it's really difficult to say that they're proper scalpers, because they have generally negative risk reward, but the accuracy is nowhere near where you should be for the negative risk reward. Remember, risk reward and hit rate work as a fine balance. They don't, they're not mutually exclusive. In fact, they are a part of the same puzzle, if you will. So you can either have higher accuracy, and to make it really stable, your accuracy should really be 70%. Now, the more negative risk reward, the higher the accuracy. And there is a point of diminishing returns where you're taking such tiny chunks out of the market, but then you do well for a few days, and then there's one day where you're just not reading it, or the market is not playing ball, and you lose everything. That's the part that I have a problem with when it comes to retail scalpers. Most of you will not be doing it correctly. So first of all, most of you won't have, and I'm sorry to burst anyone's bubble here, I'm just trying to be super straightforward, because I've seen this. I've not only traded for nearly 2 decades, I've also trained people, because I kind of fell into coaching. It wasn't some hugely calculated measure. It's like, oh yeah, we started a coaching service. People kept asking me, how did you do this trade? And then I found myself explaining one and the same thing to like 20 different people, which was, it was affecting my free time. It was like, I wanted to help everybody. And then I started putting things on a website, and then I got a whole bunch of random people asking me, where do I learn this? How do I learn this? Blah, blah, blah. All right, we're going below GEX2. That's a good sign. So here's the thing. If we leave single prints below IB, that means we have the direction for the day. So we can fish for shorts. They have made, the wizards have spoken. They say we are shorting the market on a Thursday. But yeah, scalping, we occasionally have, Bruno. Is it vodka? Sadly, Bruno, no, it's just sparkling water. It's very, very dull. And it's sparkling water that doesn't have too much sparkle, because it bothers my throat. But yeah, sometimes we have short life hacks in here. And he's a scalper coming from this institutional background. And he's got, an algorithm that does it for him. But he tested it over like 10,000 trades in a year. It's not like, oh yeah, I'm just going to do 1 week and then we're doing 1,000 trades. So time and the sample size of time, not just the number of trades, is also something you have to consider. If you think you have an edge, excuse me, if you have an edge as a scalper, that edge needs to stay through various market states. And if you're only looking at 1 week, the market state will be the same or very similar, right? You're going to have either high volatility, or we're going to have a quiet day when we're waiting for something. But then as soon as that changes, the equation changes. And then you're like, oh, well, this was working last week. Why isn't it working now? It's because you haven't tested your edge across different market conditions. So that's something that I would urge you to do with the combines, with XFAs, export everything into an external platform. We have things like Edgewong, TradeZella. We have a whole bunch of stuff that we can use to aggregate all of that data. All right, if we come back to 68, which is the GEX2 level, I will be trying to short. And if we don't, we don't. We do not chase. See, I'm somebody who trades between 3 to 5 trades per day. Now, At the moment, obviously, I'm waiting for my live account, so it's just one of those things. But yeah, so 468 would be a decent area for further downside, but I'm not considering this a breakout and I'm not chasing it. Is there anything else that looks better? No. Okay, let me see where platinum is. I'm looking for this. No, okay. We wait. Yeah. So when it comes to anyone wanting to scalp, you either have to have high accuracy and a slightly negative risk rewards, or you need to have lower accuracy and a higher risk reward like me. So I have an accuracy of about, well, it floats between 43%. Look, it's on some days, like I even have months where I'm over 60%, but my risk reward always floats between 1.7 to 2.3 R. So 43% accuracy over like 2 decades, and 1.7 R. That's where my edge lies. This is why I'm not super keen to scalp, not really interested in that. Because I know that over time, the way I'm doing things with swings is less stressful, more money, more stable over time, and has positive expectancy. So, yeah. We are about to hit ADR low. Okay. Yeah, Zaid says PA's cheeks right now. Yeah, well, copper started moving, but still, we still need a pullback. If I'm going to run a trade in the same direction, I need a pullback. So I don't want to. I very rarely chase. If I start to chase after about 2 attempts, I'm like, what am I doing? Just stop. Burning Flame says, heading to bed. Sleep well. Sweet dreams. How do you set Globex VWAP? Honestly, I think in Topstep X, VWAP is automatically anchored to Globex. Only if you want to anchor it to something else, then you need to go into forecasting and measuring tools, then get a different VWAP, which is anchored VWAP, but that's not the same thing as this VWAP. So this VWAP is anchored to Globex as a default. Bosco has a good point. Don't forget commissions. Exactly. So too much of a negative risk reward, too many trades, unless you have favorable commissions from the exchange. That's not a good thing. I need to clear my throat. Give me a second. Right, cough my soul out, so it should be a little bit better. Yeah, so commissions can eat into your profits, and then you're thinking you're doing really well, and then Topstep put you in a live account, and you're like, wow, I have no more profits left. And you're like, but I have 70% accuracy. Yeah, it's because you've done 100 trades per day. And your risk reward was probably 0.3, 0.4. So yeah, this, risk models are really a thing. Okay, so I know that many of you don't even think that way. You're like, I'm just going to do some trading. But you need to work within a well-established and well-designed risk model. So if intraday trading is the toughest out of all of the kind of investment skills, because it's so sensitive to any inconsistencies you may have. Even those of us who have reached a certain level, we still have days when we're not as consistent as some other days. And that will impact the results somewhat, but not enough to kind of hurt you, right? I wish I could show you my XFA performance dashboard, but they've closed my XFAs now because they're getting transferred, right? So I can't do that without a bit of pain on the old dashboard because I'm in the UK, so we don't have the new dashboard yet. Okay, so we're bouncing a little bit from that GEX1 level. So we'll see whether we can get back up. If we hit ADR low, maybe some pullback longs would be on the cards. So I have like orientation points, and I'm never like, oh my God, I missed it. It's like there's always another level. So let's see what the market structure does around this GEX1. Remember, step one will be for this ribbon to catch up to the price action. We can even maybe go a bit more granular, 100 ticks. That will be faster. But yeah, first we need this to start overlapping current price. Otherwise, it's just a straight up move down. And that was not in my plan, so I'm waiting. So it's not about not being wrong. You'll be wrong a lot as a trader. It's about seeing something that is not in your plan and then not feeling FOMO and not chasing it and not going, oh my God, because I only need one good trade in a day. Normally, because I trade multiple things, I will do 3 to 5, but that's not all on the same product. If I do like a smashing trade in copper and that gets me like, you know, $1,000, $1.5 grand, $2,000, I'll be done for the day on most days. And if not, I've just realized the ASR from London is a bit lower. So let me mark that as well. 462, what is this? Christ, can't see. 45. 462.45. Now here's what I like to do with these quantitative extremes, because this is what they are. I like to use them as a zone. So if either one of them gets reached, I'm never wondering why did it bounce from this area and didn't bounce from that area. So let's run through some things that can happen from these two when they're so close together. So ASR low, if you're here for the first time, my voice went there, ASR low. So ASR low is basically the regular trading hours for the active session for this particular product. So whatever active session we have, right now it's London, I take the measure that is similar to ADR, but I plot it only on the hours that we generally work with for that time frame. So for me, that would be London from 8 a.m. all the way to COMEX open, which is 1:30, 1:20, 1:30 p.m. here. But I use it as a zone when they're this close together. So which one of these, if any, okay, it might just bleed through it because, again, copper very directional. But which one of these can bring me a bounce? If we get down to a SR low and then we start rising away from it, I will still want to see it rise above ADR low and reclaim that level before I get into a mean reversion trade. Because if you're in a true mean reversion, they usually have a lot of volume because whoever was short on the way down, they're now closing things out and they are effectively going back the other way with all of that power of closing out the old positions. It's effectively a take profit move, and that's what brings mean reversions most times. Somebody goes in, they went too far, and they're either baiting out of positions or the other guys are trying to fish for shorts and then getting run over to the opposite side. So, or they're fishing for longs. You know, they can be fishing for longs and then more shorts hit their stops. That fuels more downside. You know, it can happen both on both sides of the story. But yeah, whenever I have two jammed up levels like this, I would want the original level, which in this case is ADR low, that came first, to be reclaimed. And at that point, I might be in a trade, but then I'm looking at GEX1 to also be reclaimed and not to give me further downside. And then if that gets reclaimed, I'm looking at GEX too. So it's like, it's all just like, as if you're on the road, like you're driving, and then you're coming across landmarks, different signs, and you're like, well, am I supposed to keep going straight here, or are we coming off the motorway or the highway? And then you go, oh, that's the exit. So if we get to GEX1, imagine that's like a slip road. And if it doesn't, if your journey says, well, we're ending here, you have to exit because that's as far as you're going, right? It's like, where are you going? Oh, I'm going to Paris. Right. Well, Paris is the GEX1 exit. That's the end of the road, right? But we look at that as a situational awareness and how price is behaving around those levels. If a level gets reclaimed, we stay in. If a level doesn't get reclaimed and we bleed below it, we have decent rejection, bearish engulfing, 3-bar reversal, anything will do. I also look at bookmap, so that would mean the market changing like from big bubbles to one side to big bubbles to the other side, or at least slowing down, maybe building some orders, but the order block has to be pretty large. If there's just like one singular price point with a whole bunch of orders, that's going to get stop run, like for sure. But yeah, so far, don't really have a setup here. I mean, ideally, I would like to see a pullback without me in on it, and then going into more shorts. However, we're reaching statistical quantitative extremes, and that's dangerous for further shorts. Not impossible. Today's Thursday. I know that crude oil does bi-weekly option expiries, but I'm not sure whether copper has something similar. But for some reason, Thursdays tend to bring more directional moves on my products, probably because of that. Electrician says, hi D, if you were in a trade on a range on a 5-minute time frame, how would you do it? So here's the thing, I would never trade off of a 5-minute range. That's something that Dolby does. My range trades are taken from a 30-minute chart. That's a range large enough for me to have enough risk reward and not nitpick. Anything else is a waste of time for me. For me personally, I'm not saying this the same for you, but for me, I just don't want to be losing my eyes, man. I'm going to be 45 this year. I don't care much for like my new tiny things where I can catch 10 ticks. And it's like, oh, yes, great. It's like, no. I'd rather go stick pins in my eyes than do that. But hey, each to their own. The copper commission is too high. It's like $15. No. I don't think it's, I think it's 7 either side. So, no, just 7. So $3.25, I think it is. It's not 15. And 1 tick on copper is $12.50. So it's kind of like the full E-mini. Gear says, D, nice blue room in your office in the new house. The blue is just honestly coming from the actual sunlight. I don't have any other lights here. Usually in my old house, I used to like have to put a whole bunch of stuff. And I do have stuff arriving. Like I've ordered this neon chameleon thing that's going to go on that wall. Then I'm also going to see if I can put up some panels. You can actually see them. I've just chucked everything in this room. They're the ghost panels that I was talking about. So that's the acoustic treatment of the room, right? And what they are, they're basically these thick pieces of fleece or something layered with like foam inside. And they have a steel construction around them. That's what you're seeing in the back on both sides with like the little holes. Because it was a bit too echoey. So I need to treat the room before we make some talking head videos on my own channel, the Marcus Talkers or Marcus Talker D. But yeah, Landry says it bounced here at Anchor View from the start of the year. Okay. Shah is asking me, do you know when the new dashboard is coming? No, man. No. Yeah, so here we go. Bruno is telling me it's $3.24 per round turn. So each side will be $3.24, and that's what, $6-7? Yeah, somewhere around there. So not 15. I don't know why you're trading. I think micros are more expensive on copper. But yeah. And Bruno, is that commission just for one leg, or is it like a complete commission round turn, open and close? I think it's just 324 either side. So yeah. Maybe 648, right? So less than $7, 6.5. Right. We have a little bit of movement away after hitting the ASR low here. Let's see where gold is, because all of the metals are correlating. I'm just going to check financial dues for a second, because I don't want to be stuck in headline risk. It's like, oh yeah. Let's see. Need to know market risk. A rebound in some of the world's largest technology companies pushed stocks away from the session lows, but concerns about the US fiscal footing remained, driving bonds and the dollar lower. Okay. But that was just like a general overview of what happened. And then all of the other stuff is from yesterday. So we do not have any headline risk at the moment, which can change. Okay, big rejection on the daily chart now on copper, but coming into a bit of a daily demand. Now this is going to look messy, so I'm going to hide this. I mean, this is still a range for me. That still looks like a range. So look at the weekly. I mean, weekly we're a bit up on the week, but still that demand area here. Is it gonna hold? Nobody knows. This is a monthly chart. Attempted reversal, but then a huge whipsaw back up. All right, well, maybe longs are on. Maybe they will be on. Not right now, but it's a 30-minute chart. Let's see if this thing can actually get up above ATLO. I'm a bit so copper, here's the thing. Copper very directional, right? Once it does this, you might be able to get minor pullbacks, but generally once it has this sort of a direction, about 65% of the time it's going to go into yet another leg down, into a single direction outlier day where it just smashes through all of the areas. And let me just have a look at options once again to have that visual cue. Okay, so we still have some put supports around 460. And that's also where the projected options volatility low is. That's slightly different than my simple extremes here, but it's a similar measure. It's like measure of implied volatility for the next day, depending on what they've done. So alternative scenario, we go up to 465, cannot break GEX1 and then keep going to 460. That would be probably the safest scenario here, rather than trying to fish to the opposite side. Because one thing that I don't like here is that it's not, the volume is still pretty strong. And let's look at the time-based charts. This volume to the downside was pretty big. And the upside is a 3-minute chart. This was not significant enough for me to consider a mean reversion as a valid trade setup in the moment. 5 minutes, same thing. So yeah, I would be waiting for a pullback whenever that comes, and then maybe smacking into GEX1, and we go lower. That would give us a reasonable amount of ticket to work with. So that would give, it would give about 100 tick profit potential. That's like the profit margin on the trade idea, like how much space would we have from one level to the next. So yeah. All right, I have a plan. This is what I mean by I'm looking for understanding first before I start smacking into the yeah, so Bruno is just giving me, yeah, okay, so yeah, that's what I mean when I say we're looking for understanding before we get involved. So rather than going, oh my god, it's moving, I must get in, I go, well, how would I limit risk here, and what would be the most logical step for this sort of a move that I would want to be in on? Because I don't want to be in on this unless I was already anticipating it up here, which I wasn't, okay? And that's fine. This is where situational awareness comes in. So now we wait. But yeah, that's now the first sort of step where I'm kind of comfortable going, yeah, I can see that happening X1 all the way down to the put support at 460. So pullback, attempted reclaim, smacks into a strong X level, and then we bleed back down. So that's what I'm going to be waiting for. Do you use gamma? Well, in this situation, yes. So there is there's like a concept of positive gamma and negative gamma. That's one thing. It's basically how volatile the day will be. And then you see these HVLs here. Well, HVLs, if they can be broken consistently, they will signal a change in gamma, either from negative to positive or positive to negative. So basically, high volatility into low volatility, or low volatility into high volatility. That's where the flip happens. And that's why you get these bigger moves, because it's an inventory adjustment by the market makers. This is not done by your mate Dave down the road, who's trading 5 micros on copper on an XFA. This would be like either users or producers of copper that need to adjust things, commercial hedgers, you know, people like that. Somebody with like bigger pockets. Well, yeah. Okay, so what is platinum doing, and what is natural gas doing as well? Nothing, it's too early. Okay, let's have a look at platinum while we're waiting for more development. Platinum falling below 1080, reaccepting the weekly range maybe. Value areas. London value, pretty far away. A DR low sitting at 1063.5. Let's put that there, 1063.5. This is the full 24-hour average range. See, this is what I do most days, right? I'm just like sitting there, plotting levels, you know, observing, and then once it gets to one of my levels with the context of the day, that's when I go in. Anytime I try to click buttons for the sake of chat, it's like, Dee, we want to see you trade. Yeah, that's great, but I don't have a setup. But yeah, so that has a lot of room still. Value high for London on platinum is all the way down to 1059. 1059. But it does look like metals are feeling a bit jumpy, offy, cliffy today. Let me mark this. This is London. Very high. So we have levels of interest lower down on platinum. And what are the options doing? I couldn't see any good option levels in platinum just yet. We have GEX3 at 1075 and GEX2 at 1070. So yeah, similar picture. Maybe watch 1075 and 1080 again on the upside for a continuation. Let's move that to white. $170. That one is GEX2. Then we have the 1 day minimum. Very similar to where my ADR low is. So they're both within sort of a point of each other. 1064 versus 1063. So that would be the stopping point. This whole area, London value high, ADR low, 1 day minimum. And then maybe more longs. I don't know. We'll see. And I usually do like a few hypos, 3 or 4, to account for both sides of the story at different levels. And that way, as the day is kind of progressing and moving, I'm always looking at a particular level to lean on. Right now, I'm probably more inclined to do a platinum trade short. So similar situation. If it struggles around GEX3, I would expect shorts to come in and then to drive it all the way back down into a proper mean reversion down to value. And this copper, this is a big move. I would want to see some sort of a reversion to the mean as well. Because the platinum moves are still moving within the established range, ATR, whereas copper is overshot massively. But I don't have a good level there yet. Right, we sit and wait. There is an ASR low in platinum as well. That is located at 1074.2. There's the London specific level. Make it dashed. Gold is running into an HVL from 0 DTEs. If it cannot break it, then this could signal gold stopping the move and going into more chop and sideways action. Gold has completed its value acceptance now, so we also have a value low located at 33071. So hopefully that helps for the gold traders. Let's see what they want to do with this. Dropping down to the 2-minute chart. I also have the time and sales on my other screen, so I am watching that. Where do I find my VIX levels? I find them on the CME website. It's called CVol. They call it CVol. But yeah, it's if you go into Google, so let me show you. Let's go to Google. CVol let's say copper, for example, it's going to bring you to this thing, CME Group Volatility Indexes. And I think I'm already, maybe I'm not. Yeah, so I'm already logged in. You do need to create an account. And then as you scroll down, you will see all of these. So here's metals. If you just want to go into metals, it's going to just literally provide that market. If you just want to go into energies, here they are. RBOB is not here. I don't know why, but they don't seem to have a volatility index for gasoline futures. But they have heating oil, they have crude oil, energy and nat gas. They have ags. They have even forex, you know. They have everything. Everything. Bonds. End of day. So yeah, this is what I use. Now I have my own cutoff points when the market stops doing things, and I've tracked that literally through like forward testing. It's like, how does it feel trading platinum when it's sitting below 30? And then I wrote literally in my journal, like pulling teeth. And then every time we go over 30, that tends to bring very nice movement. So platinum at 28 for me would be a sign to exclude it for that time period. When it jumps over 29, 30, I'm like, okay. And why? It's because I've done trades during those types of volatility states. And whenever platinum is above 29, 30, ideally above 30, I find the moves are easier. They do what they're supposed to do. And it's not like overlapping candles all over the place. It just gives a nice sort of smooth movement. Now, copper is still in a pretty decent area. Gold has different measures. Like each of these has their own cutoff according to what I want to see. So gold, to me, really needs to be sitting around 18, 19 in order for me to go, okay, it's not crazy anymore. Anytime gold is kind of like equities. Anytime its own volatility index goes above 20, it seems to go very crazy. So you have candles that are 135 ticks wide, but then you have like ranges, like overlapping candles, loads of wicks, and that to me is very painful to trade. Like if I'm looking at platinum, when it moves over 30, it typically goes into a trend, so it's a directional market, whereas gold goes nuts. And I don't know whether it's because it's more speculative, so there's like a lot of people that are trading it. It just gets like really stuck in this environment that's like it's like, make a move, man. And then once every week or so, they're like, right, we're either liquidating or we're positioning for more upside. Let's go. And then it's nearly impossible to catch, right? So unless you sort of happen to be in that trade, the risk on gold to get into trending moves, it's like terrible, right? So you can either go, well, I'm just going to close my eyes and buy it. And if it's not above my entry in like the next minute, I'm going to bail. Or you would have to use very small size with pretty wide stops to give yourself time and the price time to actually read the market rather than getting whipped out in a nanosecond. And gold is, sometimes great to trade. In fact, gold was one of my best products, I think from 2018 all the way till 2021. So just after the main kind of COVID event. And then, yeah, I was just like, nah, gold, not sure. So I look at these for my movement. And again, me giving you my levels of VIX on various products, it's not going to be the same thing because unless you have a very similar style to me, I know somebody like Paul H might, be very, very good with using the same numbers. But if you're just, looking for a few ticks here and there, this is not going to give you much information. Okay. Michael says, does anyone happen to know how we get free resets by the company, please? Samaru sends end of month renewal. Now, I'm not on the new dashboard, so I can only tell you what I know is that it has to be, you know, a month of you not doing resets. And then after that first month, they get banked. I only saw the dashboard from like watching other people's videos because I'm a mere mortal based in the UK, so I'm not yet privy to the first-hand experience of the new dashboard. But yeah, it does look pretty tasty. Adam says, you're so right on the money has been giving me fits lately. Yeah. Gee whiz, MHG, expecting a bounce of 461.75 on monthly level. Well, if we get down to 461.75, which is where we're at, there's a few things around there, not just a monthly level. So there's a monthly demand. We've looked at that, I think. Monthly or weekly, one of them. It's, I think it's a weekly level. I'm not sure about monthly. Don't know what you're seeing there, but yeah, weekly level, there is demand and we're kind of reacting from it. So I don't know, it's a bit risky running longs when it starts to do this, but let's see what happens around ASR low, because if it reclaims that, maybe a bit of a pullback, but to me, again, that wouldn't be a massive trade. Purely because of the way that copper works. It's a very, very directional market. So you might get a little bit of a whip back up, but then it very quickly just comes back right where it came from and then carries on, especially on days like these where it's just very strong, overshooting, decisive moves. I mean, I'm on a combine, so it doesn't matter. We can try it, right? The tactical trader says, indices have been horrible to me lately. What do you think about other products? Well, I don't, like I trade DAX and YM sometimes, but do you see me trading indices here? No, I haven't touched NQ. Like yesterday I did a little ES trade during the, what was it? Lunchbox trading, I think. But it wasn't like a serious trade. It was like, oh yeah, we went all the way down. Let's see if we can go back up. And I didn't bring out the options. If I had, I would have seen that we actually had a put support that got bled through and then we tested it. That would have been my target. But I just wasn't, I was just partly having like almost like a rest day. Because I got the email about the live 2 days ago. So not yesterday, but the night before. And I was like, okay, so no trading for me then. So until that is done, I'm just going to using this time to sort of reset a little bit. So I'm not like intently looking at like highest probability trades and how can we get in this and blah and where's my risk. I'm just like, loosey-goosey on the risk and setups. I'm definitely not using my full, capacity to find a good trade. And I know for some people, achievement is, oh my God, I've never even passed the combine. I have passed loads of them, it's not that big of a deal for me anymore. You get through stages, right? It's like you have an Olympic level athlete and you have somebody who's just starting to hone their skill. They're pretty talented, right? They're pretty talented, but they're not quite there yet. They haven't qualified for enough things. And that's how I look at the traders as well. So it's like you have some skill, you have some natural talent, you've worked a little bit on it, but there are still weaknesses there, whether it's emotional management or whether it's the actual strategy, But for the sake of actual doing a trade here, let's go into a long here. Now, I don't like the stop there, so I am going to widen it a little bit. 45 ticks for a stop loss, since the ATR on the candle right now is nearing 50. It's like 22.5. So let's see if we can get a little bit of a reversal here. But remember, X1 level is a problem level. So I might actually put my stop there. Now, if we cannot reclaim ASR low, then there's nothing. The ribbon is saying this is not the best. It is not the best signal. So why? It's because the price just poked outside of the ribbon, and yes, there's no selling wicks. So if I just go like this, there's no selling wicks, but this is not a big candle. So it's like, we still needed to reclaim at least ASR low, at least. But I don't want to do shorts here because it's fallen so much that at this point some pullback should be on the cards. And if it's not, then I don't want anything to do with that trade at all. Because for me, in order to limit risk, I would need to put my stop loss above this X1. That's where I see the risk. I don't see it here or there. This is where the previous strong market making level gave us an acceleration. So a retest of that is possible and more shorts from there. But anything here is just like, what am I doing? Like shorting the bottom? Is that what we're doing now? So yeah, let's see if they decide to run out of steam and then just go, okay, we go back the other way. Yeah, so products, there's different products out there. We don't have to trade indices, indexes. I know that people are obsessed with NQ, but I think that's more to do with the way people's minds work these days. Like we're so bombarded. There's like digital pollution everywhere, just like Jerome was talking about yesterday. You're bombarded by this like fast-moving, bite-sized pieces of information, and it's all to do with neuromarketing. So they've worked out how many times we can do stuff and how many seconds it takes to actually bring us. Oh, I've just realized this. This is up 50K combine. Oops. I should have gone into a MA. You see, this is where I'm not really with it. Do you know what? If we blow up a combine, so be it. And this would be how much risk? It would be a decent amount. Where's my other screen? There it is. Okay. Yeah, okay. So it's not going to blow up the combine, but it's going to leave it very, very tight. All right. So still a little bit of selling happening here. I'm just looking at the time and sales. Oh, somebody with 3 contracts came in on the long side. Let's see if the herd mentality can take over. It's like, so anytime we come up to a level and we kind of start to consolidate, I'm always thinking if you were in the pits, how would that look? Would they be going, hey, do you want to sell it here? Does anyone want to sell? And they're like, no. And then somebody else goes, I'll take one. So whenever there's consolidation, I just imagine a whole bunch of indecision and people being, it's kind of fallen enough. I don't know. I would want to buy it. And then I try and look to see whether that same sentiment is happening on the tape. Maybe it's just me. I don't know. Just way too big of an imagination. Tekka212 says, Dee, I heard you got called up to live. Yes, the second time around. Like full disclosure, I had some problems, a lot of problems with like the routing on the first live, and at one point I just got so sick and tired of it. So I was like, guys, we need to start again here because I'm done. And yeah, and then it took me, I don't know, like less than 2 months. I think it was like a month and a half. in the XFA, and obviously I have pretty decent consistency when I'm at the top of my game, and they saw that. So after a third payout, here we are. So it's not the biggest balance, I'm starting with I think it's going to be 19K. And to be honest, I was kind of hoping they're going to allow me to get to that fifth payout so I could build up a balance. It didn't happen, so we're just working with what we've got. But it's fine. I'm happy to be back at that level, obviously. And it's a testament of, copper, platinum, and nat gas being the right products for me at this time, the way the market state is at the moment. So yeah, it's good to be back. Sharif says, Coach Deeyana, thank you for introducing me to copper and platinum. The world is a much bigger place than just NQ and MNQ. And Marcus says, it moves. It does move. It's pretty good. The tactical trader, crude oil looks bearish. Well, yesterday was very bearish. I would be a little bit suspicious of another big down day in crude because it seduced me so many times to think that that's going to be the case now. And then I come to trade it the next day and it just gets stuck in one move of 60 ticks. And then for the rest of the 3 hours, 4 hours, 5 hours of the session, we're just sitting in 35 tick range. That's my mental trigger. When it's just not moving. And I had to check my internet connection to see whether we're is it really moving? Alright, so platinum and gold have shown some signs of life to the upside. Copper might be lagging, but let's wait. Bruno says to Adam, you can be called live anytime, even with zero payout. It's up to the risk team. Yeah, it's always up to the risk team. Adam says, is it a big difference in your mindset personally? Personally, no. So I have been a live trader for Topstep remember, I've been with Topstep since 2015, right? In one way or another. And I was even a part of their Squawk Radio. That's why I know Hogue and Eddie. And to be honest, when I was there as a funded trader the first time around, after about, I think it was 6 months or so, Mick started working for them. So then suddenly we had Hogue as a risk manager, and then this new guy called Mick came in, and I was like, oh, this is different. And then he became the head of risk team, right? And now he's going to be running, I think he's going to be on the side of brokerage. I don't know. But yeah, so I've been with Topstep for a long time. So for me, trading live is what I do. It's this whole XFA thing and, sim funded. That wasn't a thing when I was trading. We had no micros. We had, what is a sim funded? No, you just do a simulated thing when you join a prop firm. And then they put you live after 2 weeks. There was no... This is a new construct for me. And the fact that some people we now have a new job title, Sim Farmer. It's really? And then people making I make $300 a day, but I've done it 20 times over 20 different accounts. And now I'm super rich. It's yeah, but you're still making $300 a day though. That's copy traded. And to me, it's the same thing as doing one lot that's in, one account, trade 20 lots. Do that on live. See how your executions are. If you think that, so from the point of trading with sides and all these people who are doing a million accounts and them thinking that it's the same, and then they get into the live environment and they try to, they trade one, but they try to do the same size. It's 20 lots. And then they go, oh, Topstep's platform, 20, I want to trade 15 lots of NQ. But it didn't fill me immediately. It's yeah, because you're going to eat up all of the orders on the dome. There's not enough liquidity. No, it's Topstep's lagging. It's not the platform, it's the exchange. Welcome to the live markets, Whereas on XFAs, the fills are perfect. I can run a 15 lot in platinum with no problem. It's like just, literally just gets in immediately. And you're like, wow, this is amazing. And then you go into live and you try to do the same thing, and platinum is getting, like, I'll show you the dome for platinum. It's so thin on most days. It's just a thin market. Let's go here. So here we go. We have 11 contracts, 2, 3, 5, 5, 7, 5. So with a liquidity like that, if you were to do 15, you first would need to do it like the market would need to go down to this 1073, because remember, they have to match a counterpart to your order. They can't just pull it out of thin air, right? This is all liquidity. So if you were going to take the opposite side, if I was going to long platinum, and let's say I want to go 30 contracts, I will eat up all of this and actually move the market in that direction. In fact, I've had a couple of moments on RBOB when I was still trading it after settlement, and it was still like, basically 3 people like trading it. So I put in 2 contracts in RBOB and it moved the market. I was like, whoops. But because there was nothing there, it was like, we had a spread that was like a 4 or 5 ticks wide, and then 2 contracts, to the opposite side. And that's what I needed to take to execute a 2-lot order. That's the part that people don't understand. So that's why it's different. Where if you're trying to trade with any sort of size, the execution will not be the same. And you really have to be like mindful of how you operate. But yeah, it's crazy. For me personally, not a big deal. I don't feel different. The only difference that maybe is there is that I can run like 2 XFAs or 3 XFAs with different products. So, if I, let's say, designate one just for platinum and natural gas, and I do that in the afternoon, but then I have one where I trade London and I will only trade copper and maybe platinum occasionally. And that's only London. So in that regard, it's a bit different because I can't split the account into like 2 different risk management tools. And I know that Dakota has been lobbying to get multiple live accounts, because if you're with a brokerage, you can actually have a sub account. We had a ton of them when we were running algorithms through interactive brokers, and it's like we had like 20 accounts. And even on AMP, you can do a sub account. Obviously, you have to explain to them why you would need a sub account. But it is possible. Not 20, but maybe we can get 3. That would be nice. D, where are you looking at GEX levels? Mentor Q, Fabio and Co. So Mentor Q is a company that collates and aggregates very complex options matrices data and simplifies it down to a line on the chart. That's what you're seeing here. B says, are you just defending what Topstep is doing just because you're with them? No. I'm not defending anyone. I'm just using common sense and my experience that sim accounts were not a thing when I started in 2013 as a prop trader. And they certainly weren't a thing where you get paid out from demos when I started in 2007, I can tell you now. To me, it's crazy. Honestly, it's crazy that you can even get payouts from sim. I mean, in what universe? Like, I feel like I've kind of wandered into some weird twilight zone where everything is a little easier than it used to be. But hey, that's me. And yeah, Adam, that's exactly it. I get filled in my paper account. Why didn't I get filled in a live? Because liquidity. But yeah, seriously, if you look at all of the rules, like I made a comedy video on my YouTube channel. It's a short, and it just pokes fun. I use a lot of comedy on my channel anyway, but it pokes fun at all the rule changes. And, Topstep, as much as they have done rule changes, and I'm not too happy about it if I'm going to be like straightforward, but I can see why they're doing that. Like we've had some people who came into live accounts with enormous balances. Now, remember that anytime you generate an enormous balance in your XFA, that is coming from the company's own funds. Now, I know that everybody's like, oh yeah, but their money comes from failed prop challenges, and everybody's on their case that they've made a model out of people who keep failing challenges. It's like, I don't have a problem with that. That's called business. You take the probabilities, you take the fact that 90% of people are not successful, and you go, hey, if you want to be a live trader, if you're going to be a real trader, well, you need to pass this side of things. Why don't we charge a little bit of money? And guys, getting into prop firms used to be an expensive thing. You had two models: either pay for apprenticeship, which was again anywhere from 5 to 25K, or put down a collateral, which again was at the minimum $10,000. When you give the collateral so you basically join a prop firm not for $49 or 150 or 300 for an XFA. You would have to shell out thousands of dollars. Okay, and now people are complaining, and they're like, "Oh, but why does Topstep charge so for fail?" Well, how much money do you think that those prop firms back in the day were making money from? Because you would pay $10,000 for collateral, they would give you leverage because they would put it with the pool of funds that the company has, so you could trade with more size. But if you lose the $10,000, do you think you could try again and offer more collateral? They would boot you out the door, man. No, none of this like, oh, second try. No, you're out the door. Goodbye. Don't call us. We won't call you. That's how it used to be. And now it's like people failing over and over and then complaining how, oh, prop firms are making money from us. Well, then get better, man. Like, what? Stop moaning, stop being a victim, and get better at trading. Get rid of your trading gremlins. Learn how to emotionally manage yourself. Like, why do you have to blame others for making money where they found a loophole, right? That's how you make a business. You find something that is in demand that can improve the state of the current situation, like extraordinarily extortionate fees that used to be the case for entering a prop world from a non-financial background. And it's like, what are we exactly complaining about? But obviously there's been rule changes because the industry is changing. The industry has grown massively. And that means if you want to keep having prop firms, all of them, including Topstep, have to find a way to make that sustainable. Okay? If you have an unsustainable business model, like we've seen with the likes of whatever they would call FTT and some of the others that are coming in, and they're like, we're going to undercut Topstep and this person and that person, and then they blow up in like the space of less than a year. Is that wise? Do we want that to keep happening? No. So we need to have some sort of a baseline of what is sustainable. And also maybe, for the people who are running prop firms, just use math. Because you will have some profitable traders that will rinse you out. Now, Topstep has solved that by pushing profitable traders into a live account. I see nothing wrong with that. And it's irrespective whether I'm with Topstep or not. I'm just a partner at Topstep. I know that we are involved in TopstepTV. But at the end of the day, I'm not an employee. I'm a contractor, right? And I have my opinion on certain prop firms. But the reason why I'm with Topstep is because I have endless respect for what they've done. And they will never go, oh yeah, we're changing the rules, so now you can't do this and you can't do that, and we're going to do unrealistic, intentional things that will make it nearly impossible. That's why I said in the short, I said, maybe we'll give you a payout if Mercury is in retrograde. Because honestly, with some prop firms, you're not supposed to, like Topstep is a simple payout rule, right? 5 days, generate over 200, and you can take up to $5,000 per XFA. Very simple. All these others, well, if you're up 20% one day, but then you're down 30% the next day, and then we think you've made too much money, so you actually have to send us a video. It's like, what the F is really? So, I'm all for gated rules because, at one point I was running my own little prop department. Didn't like doing that. This is much easier for me. But yeah, it's like we have to, if you want to keep having favorable entry price without fleecing the trader to get into the prop firm, if we want to still have a firm that is operating the next 10, 20, 30, 50 years, then some rule changes as the industry grows and adapts, but whilst, we remain competitive, but some changes need to happen, Otherwise, prop firms won't be here. So is that what you want? Do you want the prop firms to implode and to not have this ability? Yeah, Lido said it in the comment. Yeah, Tekka212 says Topstep provides all the coaching, expertise, live coaching, offline coaching. It is up to the individual to find a sustainable, non-gambling mindset to prosper. I agree. All right, I'm annoyed with this position, so let's close it. It's taking way too long for any kind of a mean reversion. And I don't see anything else. And we are at time. Okay, so I'm still going to wait for my live account, so I'm probably not even going to look at this anymore because I'm not on TopstepTV today. I will be on tomorrow, so I'll be on for Lunchbox Trading with the lovely Anne-Marie again. But yeah, bit of a meh day again. We'll see whether that changes, but usually if I was trading the accounts that matter and I try a risky trade, because this was a risky trade, I did say I didn't like the way things were doing, but because it's a combine, let's do it. I would be waiting now for COMEX, and I wouldn't even look at the chart until COMEX opens again. So today, because I'm not on, I will probably just take a day off while I wait for my credentials to come through. And yeah, I will see you tomorrow for Lunchbox Trading, and I will see you back on Monday for another episode of the Euro Trade. Thank you for joining me. As always, you're wonderful. Yeah, let's see what Thursday brings. It's certainly starting with a little bit of a kick up his bottom. This has been the Euro Trade. I'm Marcus Toker D. Have a lovely day. Take care.